125% American tariffs on Chinese products, 125% Chinese tariffs on American goods. If anyone is looking for an abbreviated definition of a total trade war between nations, there it is. Less than 3 months of Donald Trump's presidency have brought about the biggest trade war in world history. On April 2nd, on Liberation Day, Trump announced tariffs on almost the entire world. Markets began bleeding like never before. The new US president's policy spared no one. Everyone received harsh blows equally: Europe, China, Russia, and above all, the USA. Even the closest allies like Elon Musk directly condemned Trump's economic policy. The universal criticism and empirical data that literally screamed, "Don't do this," finally got through to the American president, who decided to suspend them for 90 days, but maintaining them at the 10% level. However, with the exception of People's Republic of China, with which he entered into a direct economic collision course. Let's look at the total trade war of the USA with the entire world, and above all, with China. Welcome to the 20th Report. Donald Trump's hyped-up Liberation Day only triggered fear of the potential effects of the announced tariffs. Investors, fearing a possible recession in the United States, panicked and dumped shares, resulting in over $6.5 trillion vanishing from the US stock exchange. Is it a good time to invest in discounted assets, or is it just the beginning of a deeper decline? In an era of high volatility, it is worth having tools that will allow you to react instantly to the dynamically changing market trends. XTB Investing app, the partner of this episode, offers everything you need to effectively manage your finances. A wide range of products with access to over 4,500 shares and ETFs from all over the world, which you can buy without commission up to a monthly turnover of 100,000 euros. Analysis and market commentary from a team of experts, and an intuitive platform with dozens of tools will help you take advantage of investment opportunities. And if you feel you lack crucial knowledge, at XTB you will also find a free educational package. Check out the XTB offer by clicking on the link in the description. By doing so, you support the development of the channel. And as always, remember that investing involves risk. To gain a good perspective on the unfolding events, let's arrange them chronologically. From the very first days after taking office, Trump began an unprecedented trade war, as it later turned out, with the entire world. 7 days after his inauguration, he announced 100% tariffs on Taiwanese semiconductors. And on February 1st, he signed an executive order according to which, from February 4th, Mexico and Canada would receive 25% tariffs on exports to the USA, while China would receive 10%. 2 days later, he suspended the execution of this order regarding Mexico and Canada for 30 days. Tariffs on China went into effect on February 4th. China responded symmetrically by imposing tariffs on various American goods, including 15% on coal and LNG gas, 10% on oil, agricultural machinery, and cars imported from the USA. Additionally, they initiated an antitrust investigation against Google. Retaliatory tariffs went into effect on February 10th. On the same day, Trump removed exceptions from tariffs on steel and aluminum, meaning that both raw materials would soon be subject to 25% tariffs. 3 days later, on February 13th, Trump announced a plan for reciprocal tariffs, promising to raise American tariffs to match the tax rates collected by other countries on imports to, quote, ensure fairness. He implied that all countries would be subject to them, even allies. On February 18th, Trump announced 25% tariffs on cars, pharmaceuticals, and semiconductors, which were to take effect in April. Trump also considered tariffs on copper and timber. On March 4th, the protection period ended, and the announced tariffs on Mexico and Canada went into effect, although tariffs on Canadian energy resources were reduced to 10%. Furthermore, tariffs on China increased from 10 to 20%. All three countries announced retaliation. Canadian Prime Minister Justin Trudeau announced tariffs on American products worth $155 billion, starting with $30 billion. China imposed 15% tariffs on American agricultural products, including chickens, pork, beef, and soybeans. Additionally, they expanded the number of American companies subject to export controls. 2 days later, Trump again partially suspended tariffs on Canada and Mexico, in the context of automotive goods, after consultations with Ford, General Motors, and Stellantis. He announced that reciprocal tariffs were being prepared with the intention of taking effect on April 2nd. On March 12, the European Union entered the scene, announcing the first retaliatory actions, declaring tariffs on aluminium products, textiles, household appliances, and agricultural products worth $28 billion. The American president responded with a threat of 200% tariffs on European wine and champagne. On March 24th, Trump threatened 25% tariffs on anyone who would buy gas or oil from Venezuela. The main client of Caracas is China. 2 days later, Donald Trump imposed 25% tariffs on car imports. Finally, April 2nd arrived, Liberation Day. Trump announces the promised reciprocal tariffs. With small exceptions, including Russia and Belarus, Americans imposed tariffs on the entire world, ranging from 10% to even 54%. The algorithm for setting tariffs is quickly deciphered. It turns out that it is based on a simple formula. The US trade deficit with a given country divided by the total imports from that country, then divided by 2. For example, for China this percentage was 67%, so Chinese tariffs amounted to 34%. For the European Union, new American tariffs were 20%, for Japan 24%, for Taiwan 32%, and for India 26%. Moreover, the 34% tariffs for China does not replace previous ones, which means that tariffs on Beijing reached 64%. The calculations conveniently did not include the export of services, in which the USA has a surplus. Countries that have a trade deficit with the Americans also received 10% tariffs. Europeans, like many other nations, promised retaliation. 2 days later, on April 4th, the Chinese announced reciprocal tariffs of 34% on all American products. The Ministry of Commerce in Beijing also announced the imposition of stricter export controls on rare earth metals, which the Chinese largely control. Trump threatens that if the Chinese do not withdraw from this step, then he will add another 50% to the existing 64% tariffs, finally reaching 104%. The result? From January 20th to April 9th, the S&P 500, Nasdaq and Dow Jones fell by 15%, British FTSE by 7%, Stocks Europe 600 by 9%, German DAX by 5%, Korean Kospi by 6%, Japanese Nikkei by 18%, and Shanghai Composite by 2%. Percentages don't work well on the imagination, so let's put them in nominal values. The American stock market lost about $10 trillion in value. Of this amount, $6.6 trillion was lost in just 2 trading days, April 3rd and 4th, which is the largest 2-day loss in history. There was also a massive outflow of capital from American stock exchanges. This is a description of the first 2 months of the biggest trade war in history until April 9th. On that day, 2 more bombs were dropped. The Chinese first responded equally brutally, imposing 84% tariffs on the USA. Shortly afterward, Washington responded. Trump suspended all tariffs on the world from April 2nd for 90 days, reducing them during this period to the level of 10%. However, with the exception of China, towards which he adopted an opposite tactic. The American president raised Chinese tariffs to 125%. Later, the Chinese did the same. Total trade war. Along with reciprocal tariffs, the Chinese brought out another weapons and most likely began selling American bonds, of which they are the second largest holder after Japan. Beijing holds $761 billion in American bonds. Therefore, although the escape from the stock market usually finds an outlet in bonds, and indeed the interest rate on American debt has been decreasing in recent months, on April 9th, their interest rate began to rise sharply again. And what's more, Japan was also said to be selling American debt, which according to a Fox News correspondent was the main reason for suppressing the trade war with the world. The Chinese were also defending, among other things, with the depreciation of the yuan, which is already heavily undervalued today. Market sentiments have been shattered, which is well illustrated by charts prepared by John Burns Murdoch of FT, mostly based on studies from the University of Michigan. The Economic Policy Uncertainty Index for America is today higher than at its highest point during the pandemic. Moreover, the same is true for the entire world. Over 60% of Americans have a negative opinion about the country's economic policy, which is the worst result in decades and worse than readings from the post-2008 recession. The fraction of people who expect a deterioration in business conditions in the United States has shot up, reaching an unprecedented value in the 40-year history of measurements. The percentage of people who fear losing their jobs is also the highest in the United States in 40 years, and is comparable to the Depression of 2008. Only 1 in 4 Americans believes their paycheck will grow faster than inflation, also the worst result in the history of measurements. Trump went into the election with an iron promise to end price increases. Today, expected inflation for the next year has equaled that of Biden's peaks and the 2008 crisis. It is often said that Trump has the media on his side. However, the percentage of adults who have heard unfavorable business information about government policy has exceeded 50%, while peaks under Obama and the first Trump barely reached 30%. Dismal forecasts are also confirmed by simulations. One of them, conducted by the British Aston University, carried out under conditions where the USA imposes 25% tariffs on the entire world, and the world responds in kind, showed how dramatic consequences could fall on the USA. The analysis warns that such a scenario would cause, quote, significant disruptions in international trade and economic activity, and exports from the USA would fall by more than 43%, while imports by 30%. As a result, the USA is most at risk of rampant inflation. What does this mean in practice? Matt Priest from Footwear Distributors and Retailers of America states that a $150 pair of shoes made in China or Vietnam, which by the way on April 2nd received one of the highest rates, 46%, could cost Americans $230. If production is moved to the USA, they will cost $300 to $400. It has even come to the point where Trump's closest allies are calling for a change of course. And leading this is Trump's recent media hammer, Elon Musk, who suddenly realized how devastating an impact the new administration, whose face the multi-billionaire had also become, has on his businesses. It started with a sharp drop in Tesla's stock, but at the time Musk still remained quiet. But after the reciprocal tariffs, one of whose architects was supposed to be Peter Navarro, senior advisor for trade and manufacturing. Musk couldn't hold it anymore. Truly a moron, dumber than a sack of bricks. That's how Musk described Navarro after the latter characterized Musk as a car assembler. Note that on April 2nd, Trump imposed tariffs on almost the entire world, but with the exception of few authoritarian regimes: Russia, Belarus, Cuba, and North Korea. The American administration stated that the reason for this decision was existing sanctions systems and minimal trade value. However, trade between Russia and the USA still amounts to over $3 billion, which is higher than exchanges with many countries subject to the new sanctions. But if Trump, driving the car of the global economy, is charging like a madman toward a cliff, then the Russians, despite the recent honeymoon, find themselves in the passenger seat. After Trump's maneuvers, the price of Russian Urals oil, the main component of the Russian budget, fell below $50 per barrel, as reported by the Russian agency TASS on April 9. Its price at the Baltic port in Primorsk was $47. This is the lowest level in nearly 2 years. Moscow's budget plan for 2025 assumed a barrel price of $70. The oil price is falling in line with the expected cooling of the global economy and its demand for oil. Dmitry Peskov, the Kremlin spokesman, tried to approach the actions of an unexpected ally delicately. Quote, "We are very closely monitoring the situation, which is currently characterized as extremely turbulent, tense, and emotionally overloaded," he told the Interfax agency. Foreign Ministry spokeswoman Maria Zakharova was more specific. The White House's latest tariff decisions, which violate WTO rules, show that Washington no longer binds itself to the norms of international trade law. On April 9th, however, reflection came. Faced with immense pressure and intense criticism over the new tariff policy, the White House was on the defensive. As a result, Trump once again flipped the table while playing with his influence. Just before suspending reciprocal tariffs for 90 days, he wrote on his Truth Social platform that it is the great time to buy, implicitly, stocks. Shortly after he suspended the tariffs, the stock markets lit up green. Many billionaires from the president's circle profited from this greatly, which Trump himself boasted about. However, he decided to declare an atomic trade war on China. Let's try to understand what this is all about. In the episode Is China the New Soviets?, we discuss the entire model by which the CCP directs China. In short, China intentionally produces too much relative to needs, exporting surpluses abroad and pushing local producers, for example in Europe or the USA, out of the market. They do this at cost by suppressing domestic consumption and paying Chinese people less than they should earn in market terms. Why? First, they artificially make Chinese industry more competitive. But these decisions also have an ideological basis. Beijing fears greater individual freedom and privileges for its society, which could disrupt the hierarchical system of power in China. As a result, all the fruits of economic success in recent decades, resting on aggressive exports, flow to the Central Committee, which distributes it as it sees fit, and it invests surpluses in American securities, among other things. In 2024, China's trade surplus with the USA amounted to nearly $300 billion. Now Trump is imposing 125% tariffs on this. American consumers will pay a great price. But the overheated Chinese economy, which must overproduce, will find itself in great distress. Let's remember that China is mired in huge, often hidden debts, and is still sitting on a real estate bubble. So far, Goldman Sachs forecasts that Chinese GDP growth in 2025 may be cut by 2.4%, which means a decrease of nearly half compared to the CCP's assumptions, 5%. Citibank thinks likewise, although these forecasts were made with much lower tariffs. Considering that economic growth is inextricably linked to the legitimacy of the CCP, This news is very troubling for Beijing. But why are Americans doing this to themselves, when all signs in heaven and earth indicate that American citizens will pay the price to no lesser extent? Generally, Trump wants to reduce the domestic deficit and strengthen domestic industry, which in the last decades has largely left the USA for less developed countries. The idea itself does not seem misguided, and Americans have been taking similar deglobalization steps for many years. In 2016, Hillary Clinton, alongside Trump, was also against the TPP agreement. Biden developed protectionist policies, including subsidizing American industry through the Inflation Reduction Act. However, everything breaks down over the entire world trade system and its imbalance. Today, the world is divided into two categories of countries: those with a trade deficit and those with a surplus. In the first category, the United States definitely dominates, with a deficit exceeding $1.1 trillion annually. Other quote victims of the system include Great Britain, India, France, the Philippines, or Japan. On the other hand, we have surplus countries, which consume much less than they produce. China reigns here with a surplus of $593 billion. Germany, Ireland, the Netherlands, Singapore, Switzerland, or Russia also have large surpluses. Now, the surplus countries do not want to absorb the funds they have accumulated because this would raise local wages and prices, meaning their economies would become less competitive. So what do they do with their mountain of gold? The earned dollars are a burden for local banks, so the easiest way to transform them into assets is to purchase American government debt, effectively sending the cash back to the United States, so they can continue buying exports. And that is exactly why Michael Pettis and Matthew Klein's book is called Trade Wars Are Class Wars, because this conjunction benefits only the upper classes in both surplus and deficit countries. Capital flows to the USA in the form of financial assets, giving the American financial scene, big tech, and the rest of the elite easy access to capital and the ability to multiply profits further. This happens at the expense of the lowest social stratum, whose traditional jobs evaporated long time ago, while prices constantly rise due to the influx of capital. All this contributes to constantly deepening inequalities. Let's listen to a piece from the episode Chaos is the New Order, World AD 2025. According to the Federal Reserve, at the end of the second quarter of 2024, the richest 0.1% of people in the US owned about $21 trillion in assets, or about 14% of all US wealth. The richest 1%, including the richest 0.1, already owned $46 trillion, or about 30%. The richest 10% own over $100 trillion, or 66% of the total. But the most shocking statistic is the last one. The thin line at the bottom represents the total wealth of the poorer half of society, and is just under $4 trillion, or 2.6% of the total. This means that 334,000 people in the richest 0.1% have more than 5 times the wealth of the 167 million poorest Americans. What is more, it is clear that these inequalities have only increased since the pandemic. Yet surplus countries are also guilty. Instead of giving back these funds to their citizens, for example in the form of higher wages or investments so they could consume them, local elites keep them in a sock or send them to America by buying local bonds or stocks. Therefore, one can assume in good faith that the aim of the entire gambit would be to equalize global inequalities, reducing deficits in one group of countries and surpluses in another, with the goal of improving the situation of the poorest in all these countries. Back in December, Pettis, in Foreign Affairs, anticipating the tariffs announced by Trump, did not antagonize the idea itself and indicated that if implemented properly, they could prove useful. This was also the subject of the speech by Stephen Miran, chairman of the Council of Economic Advisors. He is one of Trump's advisors who stands behind the current tariffs. On April 7th, at the Hudson Institute, Miran explained the logic of tariffs as follows. He began by stating that both the American security umbrella and the world's American reserve assets, including the dollar, constitute a burden for the USA, because it has made American products and labor uncompetitive in the international arena. He added that other countries, by buying American assets, can manipulate their own currency, for example China or Brazil, to maintain a relatively low price for their exports. Surpluses pumped into the US economy, meanwhile, contribute to crises. Miran recalls here the year 2008, in which China, among others, bought shares in American household debt, pumping up a bubble that later burst with a bang. Therefore, Miran, like Trump, believes that the countries of the world should pay for these privileges. How? They can accept tariffs without retaliation. Second, they can open their markets and buy more from the USA. Third, they can increase defense spending and buy from the USA. Fourth, they can invest and produce in the USA. And fifth, they can also simply write a check to the US Treasury. The whole thing even received its unique name, Mar-a-Lago Accord. Thus, it can be assumed that, like Miran, who somewhat uses arguments from Pettis and Klein's textbook, both economists also applauded the reciprocal tariffs on April 2nd. This did not happen. As Pettis writes, quote, "The new tariffs don't really address the real US problem. One obvious reason is that the tariffs are largely bilateral, and while bilateral imbalances may impress those who do not understand trade and capital flows, they are in fact pretty useless. Bilateral tariffs mostly divert trade, but because they don't address the internal imbalances in the surplus countries that drive their trade surpluses, nor do they address the US role in accommodating these surpluses, they will most likely just shift bilateral balances without changing the overall US trade deficit. This, remember, is what happened after the first round of US tariffs in 2018, when the US deficit with China declined, but the overall US deficit and the overall Chinese surplus both rose. A second problem with the latest round of tariffs is that they target the wrong countries. Trump focuses on whether or not a country has a trade surplus with the US rather than on whether or not that country is running large, persistent surpluses overall. This is only the latter that export what Jean Robinson called beggar thy neighbor trade surpluses. Countries like Canada, Mexico, and Japan are not part of the overall problem because they run overall trade deficits that can absorb some of the global imbalances. If Trump administration is really serious about reducing the US trade deficit, the latest round of tariffs won't help." Unquote. What Pettis means is explained with a specific example by Maurice Obstfeld from the Peterson Institute. Quote, "Part of the game will be US buyers switching their imports from high to low tariffed countries. Buyers of natural rubber can shift from purchases from Thailand, 37% tariff rate, and Indonesia, 32%, to Côte d'Ivoire, 21%, and Liberia, 10% tariff rate. In the process, they will incur switching costs and higher costs of transportation." Klein shares Pettis' observations, ridiculing many examples of, quote, "senseless chatbot tariffs," adding at the outset, quote, "The American people's expected tax burden has gone up by 2% of national income over the past 2 months. Like all sharp budget tightenings, this will reduce living standards, and these tax increases are targeted such that poor will suffer disproportionately. The tax increases are also sufficiently complex and arbitrary that they will create substantial costs for businesses, reducing productivity and exacerbating the direct hit to incomes. And this is the crux of the whole Trump gambit. As Balaji Srinivasan writes, quote, "This is nuking every single supply chain that passes through the US in any way, under the illusion that 45 years of deindustrialization can be fixed in one day of 45% tariffs. Countless low-margin businesses, including US exporters, will be pushed into unprofitability." Unquote. And remember, we are still writing about inequalities in the trade of goods, yet we have been living in a digital economy for quite some time, in which, what a surprise, Americans dominate. It is not just the fact of inequality in goods trade that accounts for this deficit, but simply that Americans won the digital revolution and moved from factories to offices, exporting digital services to the entire world. When given the choice between a warm office with a coffee machine and Fruit Thursdays, a person usually chooses exactly that, instead of 12 hours of sewing t-shirts or even soldering iPhones. And even if someone considers moving an Air Max gluing plant from Vietnam to the USA, they will have to pay the same worker $20 an hour instead of $2. Services constitute 70% of the US economy, and according to economists, the export of these services constitutes about 25% of the American economy. Some countries were already preparing to retaliate by hitting the American service sector, which could be another reason why Trump somewhat restrained the full tariff war with the entire world. According to the narrative of Trump, Navarro, or Miran, the current system created by Americans has ceased to favor them. It caused societal stratification, increased vulnerability to crises, and somehow forced Americans to physically protect it. But let's ask a perverse question. Why has this system been maintained for so long? And why didn't previous administrations address this problem? Perhaps because it is not clear what the alternative would be, or it was known that it would be much worse. Most empirical data contradicts the thesis that the world has been exploiting Americans. This system has given America primacy in almost all the most important geopolitical domains. Economically, America has not only repelled China's attack, but has nominally begun to pull away, long leaving China behind. The architecture of the system forced the USA to have the most powerful army in the world, which the largest economy easily maintained. Was this a disadvantage or an advantage of the system from America's perspective? After all, the capital surplus gave and gives the USA a cosmic advantage in attracting talent and notoriously dominating in creating the newest and most critical branches of the economy: AI, semiconductors, big tech. The average American has exchanged 12 hours of physical work in a Ford factory for a comfortable office with air conditioning. Poorer strata of Americans will respond, but all this happens at our expense. This is somewhat true, but nominally, even the poorest strata in the US are richer than 90% of the world's population. The minimum wage in Florida, which is in the middle of the scale, is $13 per hour, $2,251 monthly. This is comparable to the minimum wage in Germany, one of the wealthiest states in Europe, but already 2 times greater than in Poland. In China, the highest monthly minimum wage in Beijing is $640, 3.5 times less. And in Shanghai, $380 monthly, 6 times less. This is also the amount, not of the minimum, but the average salary in India. Not to mention African countries, other Asian countries, or Latin American ones. Of course, life in the States is adequately more expensive. But stratification is not the fault of the entire world, but also of the American system and the way these surpluses are transferred to the lower social strata, or rather, how it is not. Now Trump has decided to throw all these advantages into the trash. led by the alleged yoke that the world has imposed on America, though he has somewhat suspended them for 90 days. However, the cult of victimhood, which he himself fought against as a part of the anti-woke campaign, may bury all advantages developed by the USA in recent decades. Trump's chaotic and contemptuous policy is causing damage worldwide. All signs in heaven and earth indicate that although there is a certain logic behind it, the embarrassing implementation and lack of cross-sectional analysis of far-reaching consequences lead to one thing: chaos. Reality, however, forced Trump to halt, at least for a moment, this madness. He did not do so with regard to China. The consensus that Beijing must change its policy is clear. However, the Chinese have no intention of yielding. Ray Dalio, an investor with large exposure to both markets, expresses hope that the Chinese will adapt, including through yuan appreciation, selling dollar assets, or liberalizing their fiscal and monetary policy to stimulate consumption. The problem is that Beijing, theoretically, should have done this long time ago, but it hasn't. Why? We cited the reasons earlier. This means that it can only get hotter between the USA and China, and some prophesy the specter of imminent escalation over Taiwan. There is a non-zero chance that historians will call the current times the period of the Mad King, and Trump won't even make it to the end of his term. However, we are currently in the eye of the cyclone, and it is by no means certain that it has reached its culminating point.